Did you commit to another CPA review course that just isn't aligned with how you learn? Well, spilled milk, baby. In the world of accounting, only one figure matters, and that's the bottom line. So by investing in Universal CPA Review, you're investing in yourself, and we promise to do everything in our power to get you the ROI that you're looking for by obtaining your CPA license. We know that purchasing a CPA review course is an investment, and we also know that spending all that money on a program that hasn't worked out sucks, and we want to soften that blow. Our Spilled Milk program will allow you to commit to Universal's Visual Learning CPA Review program at a steep discount. So reach out to info@universalcpareview.com to learn more about our program and what discounts you qualify for. Okay, so we talked about unmodified and unqualified opinions. So now let's dig into reporting for modified opinions. AKA, there is an issue here with our client. Okay, so we are going to break out the differences between our three types of modified opinions. Okay, so again, we mentioned that clean opinions would result in unmodified opinions and unqualified opinions. Our modified opinions can result in qualified opinions, adverse opinions, or disclaimer of opinions. Okay, so this can be very easy points. So let's put in the time and get these down cold. So we broke out our unmodified opinions and unqualified opinions and the different reporting formats for each. Okay, so we talked about the order of the different paragraphs. We talked about those additional paragraphs that can be included, right? Our emphasis of matter or our other matter paragraphs. We discussed explanatory paragraphs if we're talking about the audit of an issuer. Okay, so again, that is if the financial statements have been determined by the auditor to be presented fairly in accordance with the applicable financial reporting framework. Okay, but what about a situation where the auditor has determined that they are not going to issue a clean opinion? So if there are situations where errors have been discovered or other specific situations in which the auditor has determined that there is fraudulent behavior going on, so in this case, Detective Lucy would issue a report that includes a modified opinion. Okay, so in other words, changes need to be made in order to make this a clean opinion. So again, three types of modified opinions that we're going to talk about. Okay, so the good news is these names of modified opinions will remain the same for both issuers and non-issuers. Okay, so we need to know the different situations that would result in either a qualified opinion, an adverse opinion, or a disclaimer of opinion. And similar to what we talked about in our unmodified opinion module and our unqualified opinion module, we need to know the formats of the audit report if we are issuing an opinion that is going to include a modification. Okay, so while the names of these modified audit opinions will remain the same for both issuers and non-issuers, the format of these two types of reports will be a little bit different for each. Okay, so let's dig into what we need to know for the exam. Okay, Detective Lucy has now gone through all the motions when auditing both Galbraith Dental Clinic and Boobaloo Inc. She has reached her conclusion and is now ready to issue a modified opinion. So is she just going to slap together a report and call it a modified opinion? If only it was that simple. So the type of modified opinion will actually depend on the reason for the modification. So for the exam, you need to understand when a qualified opinion will be issued versus an adverse opinion and a disclaimer of opinion. So the two types on the outside of this visual can be thought of as bigger problems. Okay, so think of them as severe modifications, super problematic. So on the right, we have an adverse opinion, and on the left, we have a disclaimer of opinion. So starting with an adverse opinion, this is an opinion issued by Detective Lucy due to problems in the client's financial statements, whereas you could think of a disclaimer of opinions as being issued for reasons that prevent Detective Lucy from doing her job and coming to an appropriate conclusion. These can also be known as scope limitations or departures from generally accepted auditing standards. Okay, so in short, adverse opinions will be issued for departures in US GAAP, whereas disclaimer of opinions would be issued for departures in GAAP. And then in the middle, we have qualified opinions. Now, qualified opinions can be issued for both departures in US GAAP, aka for financial reporting issues, or departures in GAAP, aka auditing issues. So when would we issue this qualified opinion versus an adverse opinion or a disclaimer of opinion? So what's key to keep in mind for both adverse opinions and disclaimer of opinions is that they will be issued if the misstatement is considered both material and pervasive, whereas qualified opinions will be issued if the departure is considered material but not pervasive. So the key word here is going to be pervasive, and we provided a definition for this in an earlier module. But reiterating what we talked about, pervasive essentially means spread widely throughout. So not only is the issue going to be considered material, meaning it's a large part of the financial statements, but the issue that we have discovered is going to be spread widely throughout the financial statements. So maybe it is impacting many areas in these financial statements that are being presented by management. So the exam loves to test situations that would result in one of these three modified opinions. So you need to be able to identify the question being asked and be able to determine what bucket this situation falls under. All right, so thinking about reasons for issuing an adverse opinion. This is going to be, again, if we have a financial reporting issue. And that financial reporting issue is considered both material and pervasive. Okay, so they can also issue a qualified opinion for any of these reasons if the issue is considered material but not pervasive. Okay, so we can see these adverse opinions resulting from things like insufficient disclosures, an unjustified departure from US GAAP, right? We remembered that a justified change in accounting principle would be emphasized in an emphasis of matter paragraph if this was a clean opinion. All right, but if it's an unjustified departure, it's going to result in a material misstatement. All right, and if it's pervasive, then it's going to result in an adverse opinion. An unreasonable accounting estimate. So management's going to often make estimates, say for things like depreciation, right? The estimated useful life of an asset. If that estimate is considered unreasonable, then it would be a departure from US GAAP reporting and would be a financial reporting issue. Okay, so an unjustified US GAAP consistency change. Also going to result in a departure from US GAAP reporting. Whereas a disclaimer of opinion, like we said, would be issued if the departure from generally accepted auditing standards is considered material and pervasive, whereas that qualified opinion would be the same audit issue if it was considered material but not pervasive. So some of the reasons for issuing these types of opinions consist of the following. The auditor's inability to perform substantive tests. Right, we remember that substantive testing is when the auditor is obtaining that audit evidence. So if they need to look at accounts receivables and confirm the amounts or observe inventory, and management says, no, we can't let you do that, well, then how are we going to come to a conclusion about those balances? If those balances are considered material and pervasive to the financial statements, well, then that would be considered a scope limitation that could result in a disclaimer of opinion. Okay, so some other areas can be restricted use on audit tests, the inability to obtain the financial statements of a subsidiary owned by the entity being audited, inadequacy of accounting records. This is all preventative from the auditor doing their job. Okay, so Detective Lucy cannot come to a conclusion with the information provided by management. Some other areas we need to be mindful of. Management's refusal to provide the auditor with a representation letter. Okay, so if they say, no, we cannot take representation at the end of this engagement, and we're not going to sign off on this representation letter, then that could be a scope limitation. Timing constraints. Okay, so if the auditor feels as though there is not enough time to properly conduct an audit, possible scope limitation there as well. Refusal of the client's attorney to respond to inquiries, and the auditor's failure to meet independence requirements can all result in a disclaimer of opinion. Okay, so an example there would be if the audit was required by law. Okay, and that qualified opinion can also be thought of as an except for opinion. And again, it can be issued for both audit issues, right, departures in generally accepted auditing standards, as well as financial reporting issues. Okay, so departures from US GAAP. And essentially what we're saying here is, except for this one incident, everything else in the financial statements are clean. Okay, which is why sometimes these are referred to as except for opinions. Super important that we know the differences in the reasons for issuing each of these modified opinions. Okay, so now let's dig into the format of the audit reports for modified opinions. So we need to understand reporting requirements and the various formats for adverse opinions, disclaimer of opinions, and qualified opinions. We need to know in what order are the paragraphs presented and what are the keywords and phrases that are included in each of these paragraphs. Okay, so we're going to pull out our buzzwords to make sure that we know what is going where. Okay, so the language that is used within each of these paragraphs can be confusing, but they can also be easy points on the exam. All right, so as we walk through this, try to understand the logic and the intuition behind why a certain phrase or certain words are going to be located in a given paragraph. Also try to understand the common themes between each of these paragraphs. Okay, and by no means do we need to memorize every single little letter that is outlined in each of these paragraphs, but we do need to understand the keywords to focus on when it comes to each report that is being issued. So just like everything else, we need to understand the intuition behind it. So here we are going to start off with adverse opinions. These opinions are going to be presented if the modification is due to financial reporting issues that are considered to be both material and pervasive to the financial statements. Okay, so in other words, these are big financial reporting problems that are widely spread throughout the financials. So we remember that there are two reasons for issuing a modified opinion. We could do this for financial reporting issues as well as for audit issues. So again, this is talking about financial reporting issues that are considered both material and pervasive. So we're going to fire this up again by applying the title of the report, which will be the same as any other title, specifically when we're issuing this report for a non-issuer. Then we're going to have to address the report. So addressing this to the owners of the company. If this is a non-issuer, we're addressing this to Galbraith Dental Clinic owners. And the good news is that there are relatively small changes to these reports from clean opinions. Okay, but nothing too crazy. So again, we're starting this off with the first section being the opinion section. This will be very similar to the opinion section in an unmodified report, only now we're going to be calling this specifically the adverse opinion section. So that's what the heading should be. And we're not saying that this is a clean opinion, right? It's not fairly presented in all material respects. So it should be modified to say that because of the significance of the matters described in the basis for adverse opinion section, in which we will see as the following section, that the financial statements do not present fairly in all material respects in accordance with the applicable financial reporting framework. Okay, so does not present fairly makes sense because this is a modified opinion due to financial reporting issues. Okay, so our buzzwords for adverse opinion sections for non-issuers will be due to matters presented in the basis for opinion paragraph, right? This indicates that we are mentioning the opinion, but we're referencing the paragraph that will describe the issues, right? The basis for opinion paragraph. And also, do not present fairly. Okay, so we need to make sure that everybody knows that these financial statements are not presented fairly. The following section is the basis for adverse opinion section. Okay, so very similar stuff here. We're going to be describing the matters that gave rise to the modification. If it's a departure due to a failure to disclose significant events, or due to an unjustified change in accounting principle or unreasonable estimate, those would be reasons that would be described in the basis for adverse opinion section. Okay, so once again, we're stating the opinion in the adverse opinion section. We are describing the reasons for the opinion in the basis for adverse opinion section. So our buzzwords for the basis for opinion section for non-issuers would be description of reasons for an adverse opinion and basis for adverse opinion as our title. We remember that the key audit matters paragraph in the unmodified opinion report would be included if the auditor engaged to report on these key audit matters. Something to keep in mind is that modified opinions will not include a key audit matters section. So when the auditor is issuing an adverse opinion, this should be disregarded. Okay, also notice that there's no going concern paragraph that we needed to be aware of when issuing an unmodified opinion. But afterwards, we still have the management responsibility section, which is going to outline management's responsibility for the fair presentation of the financial statements and making sure that they are in accordance with the applicable financial reporting framework, and for the design, implementation, and maintenance of internal controls. Still going to include an auditor responsibility paragraph, which will include the auditor's responsibility to plan and perform the audit, to assess risk, and to come to proper conclusions. Okay, so after these paragraphs, just be mindful that any other reporting responsibilities will be outlined by the auditor in a succeeding paragraph, and the auditor would simply just sign off on the report and address it and date it. Okay, so that's the audit report for Galbraith Dental Clinic if we are issuing an adverse opinion. So what if we have an adverse opinion that's being issued for Boobaloo Inc., an issuer? So the audit report for an issuer is going to be a little bit different if we're issuing an adverse opinion than it would be if we were issuing this opinion for a non-issuer. So if this is an issuer that we are reporting an adverse opinion on, we're going to start with the opinion section yet again. But here we're going to include specific language. We want to include language that states, because of the effects of the matters discussed in the following paragraphs, the financial statements do not present fairly in conformity with the accounting principles generally accepted in the United States of America, which makes sense. We have an adverse opinion, meaning we have financial reporting issues. This is a departure from GAAP. Okay, so thinking about the buzzwords for the adverse opinion section if we are auditing an issuer. The first one is due to matters presented in additional paragraphs. Okay, so we're still not describing the reasons for the adverse opinion in the opinion section, but technically we're not going to be describing these issues in the basis for opinion section if this is an issuer. All right, so we're going to have that additional paragraph in between the opinion section and the basis for opinion section if this is an issuer. This additional paragraph is where we're going to be describing the matters that are reason for the adverse opinion. Okay, so we're making reference in an additional paragraph. We're also explicitly stating that they do not present fairly. Okay, so as we mentioned, we have this additional paragraph. In the additional paragraph thereafter, we're going to include the reasons that led the auditor to conclude that there has been a departure from generally accepted accounting principles, meaning this is different from a non-issuer report. Okay, so as we said, in the non-issuer report, the reasons would be described in the basis for opinion paragraph. So in an issuer report, we just have this additional paragraph that's going to outline those issues that gave rise to this opinion. And then after that, we have the basis for opinion section, which is the same basis for opinion section as any other report for an issuer. All right, it's going to have a heading that says basis for opinion section. And the basis for opinion section will have a header that says basis for adverse opinion if that's the opinion we're issuing. So no meaningful changes there. And what we're going to learn is that the critical audit matters paragraph, which we remember from unqualified opinions as additional matters that should be specifically reported on that the auditor finds to be challenging or particularly complex. What you need to know is that for issuers, the critical audit matters paragraph will be excluded for adverse opinions and disclaimer of opinions. Okay, so this will be included still for qualified opinions, but we will get there in just a little bit. Okay, so the second modified opinion is the other opinion that is considered a big problem. So disclaimers of opinion will be issued when a departure from generally accepted auditing standards exists, and that departure is considered both material and pervasive. So again, this could be due to things like management-imposed scope limitations, could be due to possible independence issues. But at the end of the day, this is a problem with the auditor's ability to perform their job in this engagement. So this does not have to do with management's financial reporting issues. So the audit report for non-issuers is very similar. Okay, so we're still going to title it and address it to the proper owners of the private company. So the owners of Galbraith Dental Clinic, for example. And then we're again going to jump right into the opinion section. So this is going to be titled the disclaimer of opinion section. And basically all we're saying here is that the auditor will not be expressing an opinion on the financial statements, right? They've done their work, but they are unable to come to a conclusion. All right, we're also going to include a statement that says, due to the significance of the matters described in the basis for opinion section, the auditor is not able to obtain sufficient appropriate audit evidence in order to provide a basis for this opinion. So we need to let the financial statement readers know that the financial statements have been audited and that the auditor was engaged to audit the financial statements. But again, no opinion has been reached in the basis for disclaimer of opinion section. This is where we're going to describe the reasons for the auditor's inability to obtain that sufficient appropriate audit evidence, the reason for why they could not come to a conclusion. Okay, so taking a look at the buzzwords for the opinion paragraph. For non-issuers, we got to remember that there's a statement that says the auditor does not express an opinion. Okay, so no opinion is being expressed. They can't come to a conclusion. That's the point of the disclaimer of opinion. So this paragraph is also going to state, due to the significance described in the basis for opinion. Okay, so again, we're not going to be describing the reasons for the disclaimer of opinion in the opinion paragraph. We're going to be describing those reasons in the basis for opinion paragraph. So we need to make reference to where the reasons would be described. And that is, again, in the following paragraph. Okay, and also need to include a statement that we were engaged to audit. Okay, so we're not including a statement that says we have audited. Instead, we're saying we were engaged to audit. Okay, if we had audited, that would imply that we came to a conclusion. Because we're issuing a disclaimer of opinion, by definition, we haven't reached a conclusion. Okay, so again, after the opinion section, we're going to have a basis for our disclaimer of opinion. So we're going to have to title this the basis for disclaimer of opinion, but we also need to make specific references. Here we're going to describe the reasons for the disclaimer of opinion. Okay, so the reasons why we were not able to obtain sufficient appropriate audit evidence. Okay, so also going to make reference to the auditor responsibility paragraph. Okay, the AICPA wants us to include a reference to where the auditor's responsibilities are described. Okay, if we're not going to do that, we need to include a statement about whether audit evidence obtained is sufficient and appropriate to provide a basis for the auditor's opinion. Okay, so what are our buzzwords for the basis for opinion paragraph for a disclaimer of opinion? We're looking for the description of reasons for the disclaimer of opinion. We also need to include a statement about whether the audit evidence obtained is sufficient and appropriate. And we got to note that we're going to title this the basis for disclaimer of opinion. Okay, so again, any modified report for non-issuers not going to include a key audit matters paragraph. So no key audit matters section like we would have if this was an unmodified opinion for non-issuers, and the auditor agreed to report on these key audit matters. Afterwards, we're going to include management's responsibilities, which we remember are keywords for this, right? Financial statements and internal controls. And then we have the auditor's responsibilities. Okay, we need to understand that they're responsible for planning, performing, assessing risk, and coming to the right audit opinions. Now, if we're talking about a disclaimer of opinion that is issued for an issuer, right, saying now that we are issuing this for Boobaloo Inc., there are some small tweaks that we need to keep in mind. So we're going to start again with what's referred to as the opinion section. But again, we're going to title this the disclaimer of opinion section, right? Certain words are going to be included in this section. So the auditor needs to explicitly state, we were engaged to audit instead of we have audited, right? We were engaged to audit, again, means we were hired to do this work, but because of the fact that we weren't able to come to the right conclusions, we're instead saying here that we were engaged to audit this. And if we say that we have audited it, then we're saying that we have come to a specific conclusion, which we haven't. Okay, and again, we need to describe the reasons for why the auditor was not able to obtain sufficient appropriate audit evidence, hence the reason why they're issuing this disclaimer. They also need to explicitly state here that they do not express an opinion on the financial statements as a whole. So unlike the non-issuer report, we're going to have this additional paragraph for issuers after the disclaimer of opinion that outlines the substantive reasons for the disclaimer and also mention any reservations that we have regarding the fair presentation of the financial statements. Okay, so after that additional paragraph is now the basis for opinion section, very similar to the previous report, although some sentences have been omitted here. And this is what we're going to remember as our keywords. We're no longer going to say in the basis for opinion section that it is our responsibility to express an opinion on the company's financial statements. Okay, so that's omitted. Nor are we going to say that we conducted the audit in accordance with whatever framework, right? And reason being is, again, because we haven't audited the financial statements. We were engaged to audit the financial statements when issuing a disclaimer of opinion. But because we did not complete the work or were unable to complete the work, we are not saying that we have audited them. Okay, so that's also omitted. And again, when it comes to the critical matters paragraph, this will not be included if we are issuing either an adverse opinion or a disclaimer of opinion. So if the opinion is modified and it is considered both material and pervasive, no critical matters paragraph. Okay, and finally taking a look at the reporting requirements for qualified opinions. So very similar stuff going on here. We're going to title this and we're going to address it. Okay, so we're going to address it again to the owners of the company if this is a non-issuer, to the board of directors, and the shareholders if this is an issuer. All right, but starting with non-issuers. First section is going to be the qualified opinion section. Okay, so we got to know the key buzzwords for the qualified opinion section. So it needs to be headed correctly, and it needs to state that in the auditor's opinion, except for the effects of the matters described in the basis for opinion section, the financial statements are presented fairly. So that's what's key. This is, as we mentioned, what we refer to as an except for opinion, meaning except for the matters that we are describing in the following basis for opinion paragraph, everything in the financial statements presented by management is good to go. Okay, so except for that one little thing, this is a clean opinion. So as we said, that one matter that is going to modify this opinion would be described in the basis for opinion paragraph. Right, so in the following section, we're going to simply give a description of the matter that gave rise to this modification. So if the reason is due to a departure in financial reporting requirements, right, saying that this is a gap issue, but that gap issue is not considered material and pervasive, then the description of the issue would be described here. And the same goes for if, say, there was a scope limitation imposed by management. If the result would include a qualified opinion, then the description of the scope limitation would be included here in the basis for opinion paragraph. So after that, we have, again, the management responsibility paragraph and the auditor responsibility paragraph. Same story as any other report. Management's responsibilities aren't going to change, and nor are the auditor's responsibilities. Okay, so management will still have the responsibility for the preparation and the fair presentation of the financial statements to ensure that they are in accordance with the applicable financial reporting framework and for the design, implementation, and maintenance of internal controls. So Detective Lucy is still going to be responsible as the auditor for planning and performing the audit engagement. She's going to be responsible for assessing all that risk and for obtaining sufficient appropriate audit evidence. Okay, so if this, on the other hand, was a qualified opinion that is getting reported for an issuer, right, saying now that this is an audit report for Boobaloo Inc. instead of Galbraith Dental Clinic, then again, the format is going to be slightly different. So they are firing this up again with the opinion section, which is very similar to the opinion section for the non-issuer audit report. Only difference is that we would have some additional language in this paragraph. So we're now stating, except for or with the exception of, and we would go ahead and make reference to where we're describing the reasons for that qualified opinion. After that, we would have this additional paragraph, which will include any substantive reasons that led the auditor to this opinion. So no changes are being made to the issuer report for the basis of opinion section. And keep in mind, the critical matters paragraph is still going to be included after the basis for opinion paragraph if this is a qualified opinion, right? We remember that if this is an adverse opinion or a disclaimer of opinion, then the critical matters paragraph would be excluded. Okay, so that's another sneaky takeaway.